Hello, welcome back to AlphaSilver, episode 4, Pay Attention America. Appreciate you joining back again. Hopefully you'll find this informative. This is a podcast for educational purposes only. Again, just to try to inform people and make sure they're doing risk mitigation and having some silver or gold in their portfolio. So today I wanted to go through a few interesting tidbits that are relevant for right now that we hear in the news a lot. And that's on how are gold and silver performing relative to the rest of the market. On the last podcast, we mentioned bonds and stocks, except for 7 magnificent stocks that have performed well. The rest of the stock market has not performed well, and the last 18 months for bonds has not been good performance at all. And just for informational purposes, again, I'm not trying to say put all your eggs in one basket, but historically speaking, here the last little bit, gold and silver performed very well. And through this series, we'll be showing how really for commodities and precious metals, we're looking at a bull run decade here, and we'll be talking more of that in the future. But here's kind of a current as is update with where we are right now. One of the things I want to look at is why you want to diversify is in case other assets depreciate or go down, you want something that's going to help mitigate that and rise at the same time. And historically, housing, as we've mentioned, we're at the highest affordability issue really in history since it's been tracked. And I just wanted to show here a good example of how the real estate market really takes 4 to 5 years to roll over for residential. On medical properties and commercial properties, that rollover happens much quicker. But with a 30-year mortgage and with unemployment that it takes to raise, and then going to the short sale process, and then the foreclosure process, all of that takes 2 to 3 years. And so here's an example of a 62% reduction in the average price of a home across the United States in the last real estate debacle, which started in 2006, and we didn't really start to come out of it until 6 years later. So again, it gives people kind of a perspective. These things happen in terms of years and processes, not just immediately. But you can also see here that immediately there is quite a large drop that does happen in one fell swoop quickly, and that these shaded areas coincide exactly when the Fed starts to lower rates. It's historically 100% accurate going back 60 years. When that happens, the recession is officially declared, and that's when a lot of the damage actually occurs. So here's an example of what happened in San Francisco in that time frame, 44%. So again, real estate is local, but just gives you good examples of even in the best markets, there's still large depreciation. Again, this is why you want to risk mitigate and perhaps have some gold and silver in your portfolio. A lot of people aren't talking about this, but pockets of this have already started here this year. So here's an example of San Francisco since March of 2022 to now. So we're looking at about 9, 7, so 18-month process. We've already seen a 15% decline, and again, it's happening there, and we're seeing some short sales start to take place. So those are kind of the leading indicators to watch, is to look at unemployment. We just had a 0.5 increase in unemployment, which historically is also a very strong indicator of recession. When anything bumps a 0.5 on the unemployment rate, that's a big leading indicator. And then looking at the foreclosure rates and the short sell processes that I mentioned earlier. All right, the other thing I wanted to focus on is just looking at world currencies. The US dollar has performed well vis-a-vis the rest of the currencies in the world. But here is the price of gold in the full basket of world currencies. So you can see over here a bull run that's really started to happen 2016, has just continued in terms of world currencies, how the price just continues to increase. And here's an example of it in Australian dollars. So if you look at just 2021 here, you're seeing us start to climb in the price. So these are this is the price of gold. We're at all-time highs in terms of the Australian dollar. We are at all-time highs in terms of the British pound. We are at all-time highs when in terms of the euro basket. We are at all-time highs when Canadian dollars, and this just goes on, and Japanese, all kinds of currencies that the prices at the highest ever. Um, Look at the US dollar vis-a-vis all other currencies, that's called the DXY basket, and we perform fairly strong. But even over a long period of time, you can see how gold actually outperforms even the DXY if you were to trade that. So this just shows kind of, again, the fiat currencies, how they erode over time when it comes to sound money or real money, gold and silver. Um, Here is the US dollar, has been again performing very, very well. And that actually puts downward pressure on the metal inside of our country. So the reason I wanted to do this podcast is other countries are investing because the frog's kind of boiling on their currency already. Being the reserve currency, the US dollar, we export a lot of our inflation. And so it'll be one of the last fiat currencies to really suffer in terms of that valuation. But I just point this out because it's most likely going to happen. It's something you want to mitigate against, and you'll be rewarded if you do. Again, don't put all your eggs in one basket, but it's something that you want to have. So the U.S. dollar, also an indicator that it's struggling a little bit, is it used to be about 60% of the global settlements. It's now down to, I think, the high 40%. So it's being used less and less to settle. So that basically means that it's losing its grip. It still has a very strong grip in terms of the Bank of International Settlements and being the majority currency, but it's slowly, just like that 6-year kind of devolving on the price of the homes in the market here in the US. These kinds of things take years, and so you want to be aware of the trend and you want to position for the trend. And so the trend is that it is getting weaker, and as we saw, comparative to all other currencies in the world, gold is at the highest level. And if you look at here in the US, for the last year, our chart is much different. We've basically just been chopping and consolidating right around that 2000 price, not really going anywhere, while we've seen that parabolic growth in all other currencies. So again, this basically, and this is the same is true for silver. So just gold, there's a lot more charts on gold, but there's ratios where silver tracks to gold very closely, and it's basically the same overall pattern. So there are things to be aware of. That means that it's still comparatively or relatively low priced in the US. So it's still a relative, very good purchase compared to buying it in other currencies and other nations. So while Americans aren't stacking, they should be. And that's kind of my takeaway message. Thank you.